Are you confused by insurance terms? Or maybe you have a hard time following your insurance agent because you don't know what they're talking about. Do you struggle to understand deductibles, co-pays, co-insurances, the whole shebang? Don't worry, we've all been there. In this video, I'm going to go over 9 common insurance terms, and as a bonus, I'll give you one special insurance tip you won't want to miss. So sit back, relax, and let's get into it. Okay, so let's start off with an easy one. A claim is a request made by either you or your healthcare provider, asking your insurance company to pay for services. A claim would typically be associated with a doctor's visit, emergency care, or blood work. So every time you use your plan, you're filing a claim. For example, let's say you go for your annual checkup. You give the receptionist your insurance card and they take down your plan information. After you get your checkup, the doctor's office administrator, using the information they got from your card, will contact your insurance provider. The exchange will play out something like this. Hello, this is health insurance. How can I help you? Hey, I'm making a claim on behalf of so-and-so. They needed a flu shot at our office today. How much can you cover so they don't have to? A flu shot? We can definitely help with that. We'll check our records. This phone call is essentially how the claims and the claims process works. It is typically done electronically though, so no actual phone calls may be made. Just keep that in mind. Simple enough, right? Let's get into the next one. A premium is typically a monthly payment you make to keep your coverage active. This is just a fancy way of saying your monthly bill. I like to think of my insurance as a subscription service, and my premium as the amount I need to pay on a regular basis to keep that service going. Some insurance providers charge annually or monthly, so make sure you're on top of all your due dates. It's best to keep your account on auto pay if you have that option. I mean, you don't want your coverage to lapse because you forgot a payment. There would be no worse feeling than getting a bill after a doctor's visit only to find out your coverage expired due to lack of payment. A deductible is the amount you, as the policyholder, must pay before your insurance kicks in and starts to help you out. Let's say you sign up for a plan with a $1,000 yearly deductible. That means that you need to spend $1,000 on your healthcare completely solo before your insurance company will help you pay for anything. Keep in mind, your premium payments do not count to meeting your deductible, so you will need to pay your premiums each interval and your full deductible before your insurance company will help cover you. This is because that you are telling your insurance provider that you'd like to pay more upfront for your cost and the insurance provider won't be paying as much. So a $20 monthly premium may sound good in theory, but you may not get much financial help from your plan if your deductible is much larger to compensate. Also, a little something to note. If you have a copay, your copay also does not count towards your deductible. Copays are paid separately, so don't get confused. An exclusion or limitation is exactly what it sounds like. This is something that an insurance provider does not explicitly cover. Common exclusions could be cosmetic surgery, weight loss programs, and acupuncture. Take a close look at your plan benefits before you book that nose job, or it may end up costing you an arm and a leg. A very common type of health insurance plan is an HMO. HMOs, or health maintenance organizations, are generally more affordable but offer very little wiggle room when it comes to which healthcare providers you can visit. You see, a health maintenance organization is a dedicated network of pharmacies and providers who work together to coordinate your care. So, if you have an HMO plan, you can only visit individuals and institutions that are a part of that same organization. If you don't, your insurance may not cover a cent, so make sure to check your plan and consult the network before you schedule your next appointment. But before I get too ahead of myself, let's hold here for a minute. What does it mean to be in-network or out-of-network? Everyone loves a 2-for-1, so here's a term within a term within a term. An in-network provider is a healthcare provider that is part of the HMO you've signed up with. Again, the benefit of having an HMO plan is that they tend to be cheaper than the alternatives. The reason behind this is that the physicians and pharmacies have agreed to do a discounted patient rate in exchange for insurance providers sending more patients their way. An out-of-network provider is just that. They're out of network, meaning they don't have any ties to your HMO. This isn't a bad thing, however, receiving healthcare from an out-of-network provider may result in you paying full price for your care. Also, here's a special tip. If you call up a healthcare provider and you ask them if they take your insurance, you may want to double check if they are in-network or out-of-network. Just because the healthcare provider accepts your insurance does not mean they're within your network. It simply means they accept payments from your insurance provider. Once again, double check to make sure you are doing things properly and making the most of the benefits you're paying for. You may have heard that your health plan won't cover something because it was deemed not medically necessary. Medically necessary means that you need a service to be administered to treat, diagnose, or prevent an injury or illness. So, if you have an infection and you need antibiotics to treat it, it is deemed medically necessary, which would result in your coverage kicking in. An example of something that may not be considered medically necessary could be a Botox injection. Your plan may not pay for receiving Botox because it isn't normally considered beneficial to your health. Of course, consult with your plan representatives and chosen physicians before making any decisions on your care. You never know. What might not be medically necessary normally may just be needed in your case. One last term. When you sign up for any type of insurance, you are reducing your risk of exposure. What do I mean by that? Let's get into it. Exposure to risk is essentially the potential to experience financial loss due to many factors. This can be affected by your occupation, your lifestyle, even your zip code. Insurance is meant to be a tool used to help protect you and/or your family from experiencing financial loss. So, for buying that insurance policy, you're transferring some of that risk to the insurance company. The insurance provider agrees to cover you for however long you agree to, and they provide support when you need it most. It's true you don't need to purchase coverage, but if you were to break a leg and require surgery, would you really want to cover that extremely expensive procedure completely out of your own pocket? I wouldn't either. And there you have it, 9 easy terms plus a special tip. If you're not sure about your current insurance coverage or your insurance needs, follow the link in the description and we can connect you with a friendly insurance agent. Our agents can assist you with any questions you have at no cost and no obligation. Don't wait until it's too late. Click the link in the description to get started. And as always, if you're interested in empowering yourself and taking control of your situation, subscribe to our channel to put more health, life, and financial tips on your radar. Thanks, everyone.